Good morning, everybody. This is the live market open for Tuesday, April 12th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. And as always, we'll cover the recent developments in markets. I must say there weren't too many today, but things are warming up. Various charts and levels, the next 24 hours, and of course your questions. If you cannot see the chat alongside the screen, please go to the address here. tlk.io/fxstreet-forex-live-video. Okay, so what's going on in market? Well, I was talking in recent days that sort of the dollar against everybody, and it's not anymore risk on, risk off. Well, now we can define it as a risk on sentiment. The Japanese yen is finally sliding, finally correcting the big gains that it made, and all the rest are moving up. Oil prices are also up, stock markets are looking good. And of course, when we talk about risk on, we're also seeing that the pound defies gravity. Okay, we're talking about all the problems in the UK, the Brexit debate, Cameron's personal affairs, the Panama Papers, what else? Terrible economic figures on Friday. Nevertheless, the good mood raises all risk ships, let's call it this way, and the pound also is rising. Yesterday we had talk about the Fed, but nothing of importance came out. So there was this expedited Fed meeting. We heard nothing about that. And we do know that US President Barack Obama met with Janet Yellen, the chair of the Federal Reserve, and they talked about the economy, but nothing else came out of that meeting apart from the general, from the White House said that they had a good meeting. I mean, nothing meaningful, okay? All right. Busy news day. Well, Jack said, Bon dia, Sinatra. Hi, everybody. There's lots of political news in the UK, for example, but for markets, I couldn't pick up too many things of significance. What we did have as an indicator that did help, did move markets, is the Australian business confidence that went up, doubled from 3 to 6 points. Also, one of its components rose, and that, of course, this goes hand in hand with the rising stocks, risk on sentiment. So we'll look immediately at the Australian dollar as well as other currency charts. Okay. So let's begin, of course, with euro dollar. Euro dollar. I would say this is it's becoming a bit frustrating, this pair. We had a big rise around almost 2 weeks ago. Since then, we're in range 113.35 to 114.60, and most of the time trading in a more narrow range. Yesterday, we had an attempt to move to the upside. Now, you can draw here some kind of triangle, some kind of wedge. It's easier to see the uptrend support and a bit less the downtrend resistance. But for me, this is range trading. The pair is stuck. It's frustrating. I don't like this. We've seen that in the past in many occasions, but usually there is some kind of an explosion to the upside, to the downside. Currently don't have a specific bet. Pound dollar, here we're seeing yet another meaningful recovery. At least technically, the pair is behaving in a much nicer fashion comparing to euro dollar. So 142.80, this level caps the pair. Now we're a bit lower, 142.66. All in all, cable is on the rise. 140.50 is a strong line of support. We did see it breached last week, but that was only temporary, and we got the next support line was 140, which is also, of course, a round number, a significant number. Anyway, I don't see the pound as too perky for fundamental reasons. Once the mood settles down, once this happiness fades out, I see the pound as one of the more vulnerable currency pairs. Okay, dollar yen. Okay, we had a recovery. The Japanese yen did slide a bit, but it's still keeping some distance. I mean, not moving too far away from The lows of 107.65, currently, 60 pips higher, but in terms of the recent movements in dollar yen, this is close, okay? We're not that far from the bottom. 109 remains resistance. That's the line the pair challenged. Not yesterday, it was last week, right? Let me see when exactly that occurred. Yeah, that was on Friday. Okay. Anyway, this is the current range. So dollar yen is off the lows, but not going anywhere fast. Dollar CAD, here we're seeing already quite a significant movement. Oil prices are rising. The Canadian Bank of Canada meets tomorrow. So it's a mix of, well, it goes hand in hand. It sort of fuels one another, pun intended. It's oil prices and the risk on sentiment boosting the Canadian dollar. We've seen a clear breakout under the previous line of 129.30, which worked as support in late March. Now we're at lower levels. I still see the more significant support line only at 128.30. Let me show you why. Let me zoom out to the daily or even 4-hour chart. I think let's zoom out to the daily chart and you can see why 128.30 is important. Okay, so that was 128.30 was the low point back in October, and if we shift a bit back, we can see it worked as a very stubborn line of resistance back in March. Last year. That's just over 1 year ago. Anyway, 128.30 is critical support for the for dollar CAD. If we zoom back in, so 128.30 to 129.30. I talked earlier about the better than expected strong business confidence in Australia. It helps the pair make a move to the upside off the lows. Remember, it found support at 75, then above 75.33, made a move above 76, now making an attempt to break even higher ground above 76.40. 76.40 worked as support in late March, when the pair was on significantly higher ground. So this worked as resistance only for a few hours, and now we're moving to the upside. Next resistance that I see is only way above at 77.25. Okay, but good days, happy days for the Australian dollar. Let's see if this will change with the next releases. It's a busy week for the Aussie. Okay, also the Kiwi is enjoying some strength. Managed to move above 68.20. Now battling 68.80. Very strong resistance at 69.80 under the round number of 70, and was the peak seen also around that time, late March. Well, late March is just 2 weeks ago. Anyway, Kiwi also enjoying this. Swiss franc, dollar Swiss. Here we are above support. We're seeing the dollar sliding once again this morning. So 95.20, some kind of support, followed by the very round number of 95. Resistance remains here at 95.50. Compared to, if you look at this dollar Swiss, which is, the Swiss National Bank intervenes a lot. Dollar Swiss is not the worst technical pair. Maybe this is the worst. Euro Swiss, that's where the S&B intervenes most. That's where it cares. So we're off the lows of 108.60, and under 109. Euro pound. Here we had this recovery of the pound defying gravity, but as you can see now, it's clinging on to support at the very round level of 80. So euro pound is still okay. 81.15 was the high, and further resistance before that line is at 80.50. Support only at 79.30. This cross can boast quite positive technical behavior. Okay, so we're seeing the pound defy gravity, ignore all the bad news, and this strength is also seen against the euro. Euro yen, here we're seeing a bounce off the lows and this risk on sentiment, and more specifically the retreat of the yen from the highs. So we're at 123.70 at the moment. 124.20 is resistance, 123 is support. And the dragon pound yen, very nice technical behavior, tone support at low ground at 151.85, which was also a line in the past. And now we're challenging the previous low, the previous multi-year low, I would say, of 154.66. And let's see if we have a break above this line. If we do, the next line I'm looking at is still 156.10, even though it's been, well, you know what, let's update this line. It's not as strong as it used to be to the downside. When on the upside, it's a different story. 156.60 is perhaps more relevant. Anyway, pound yen, the dragon, gepi, whatever you want to call it, is moving quite fast. And I skipped oil prices. Let's talk about WTI crude oil. Most importantly, just it's trading above the round level of 40.50 at the moment, still off the highs seen a few weeks ago, when things were really looking good for oil, and it almost touched 42 on WTI. Remember, the WTI and Brent usually trade more or less in tandem. Anyway, we're off. Well, if we look in percentage points, not only in US dollars, we almost touched $35 on WTI crude oil just last week. The better than expected inventory data, the drawdown in oil inventories sent the pair gradually higher. There are also expectations from the Doha meeting. OPEC and non-OPEC members are meeting on Sunday, April 17th. In Qatar and Doha, the Qataris are mediating between, well, the Russians, the Saudis, and the Iranians. No love lost over there. My bias is negative on oil because I don't see them reaching an agreement. And one of the reasons for them not reaching an agreement is the fact that oil prices are not at panic low levels. So if we're at these levels, there is no real motivation to announce a freeze or a cut, or so they might reach some kind of agreement to continue monitoring or freeze at very high levels. That means waiting for a cold day in hell, or whatever you want to call it. Even if they do agree to something more ambitious, to some kind of production cut, the key is implementation. The proof is in the pudding. I don't see, well, I'm talking from past experience, not my own, of course, but the Saudis and the Russians already had agreements in the 90s and they didn't really keep them. The Iranians say out loud, we've just come back online. We don't want to freeze production. We need the cash. So I'm it's not trade advice, but I see oil prices as a bit too elevated. Remember that when oil prices rise, the U.S. shale industry ramps up production. So yeah. Okay, let's see if you have any questions. Yeah. Yeah. You can start singing. I won't start singing. Good morning, everybody. Mr. Yen says 105 is not a problem for the yen. Yeah, I forgot the name of Mr. Yen. Anyway, he's one of the senior advisors there in Tokyo. And don't know how, well, he got this nickname, Mr. Yen. Anyway, I think I said before, I do see the Bank of Japan and the Ministry of Finance intervening, but they would need the market to go with them. That means the situation to stabilize, reach some kind of low, and they would sort of ride with the wind, not try to catch a falling knife. Okay, so maybe now is their chance to intervene. Remember, they're under high scrutiny. Yesterday we had a speech from U.S. Treasury Secretary Jack Lew. He said that he warned against FX intervention. Of course, his words were directed for Japan and for China. Of course, not for Switzerland. And of course, he ignores what the Fed does to their own currency by all this QE, all these QE programs over the years. Anyway, a bit of hypocrisy, but anyway, yeah, maybe now is the chance for the Bank of Japan to intervene when the market mood is better, when the market is selling yens, to take advantage of this and to push the yen even lower. Yeah, more questions. Well, good morning, Luca. Good morning, Frank, Fabian. Sinatra says, I expect WTI to go up a little further in the coming 1 to 2 hours, then decline. Yeah, it could go up. I mean, until the mood changes. We'll talk about that soon, the data pieces we have for today. Not too many during the European session. Luca asks what happened to that funky Obama Fed meeting. Yeah, so what happened there was that the White House released a statement that Yellen and Obama had a good meeting talking about the economy, nothing of substance. Think big oil money helping to keeping the... Yeah, there is, of course, as Jack's hints, there is a correlation between oil prices and the US dollar, usually, well, an inverse correlation. When the US dollar is stronger, oil is weaker, and the other way around. But another thing keeping the dollar weak is just the dovish sentiment coming out of the Federal Reserve. We heard Yellen twice saying the glass half empty, talking about worries about the global economy, uncertainty about inflation, that caution is especially warranted. I'm quoting from her speech back in New York about 2 weeks ago. And also Dudley, number 3 at the Fed, echoed this sentiment. The hawks were subsided. Okay, so it's, yeah, it's a lot of, I would say it's more the Fed's influence than oil. Okay, let's talk about events coming up for today. Oh, we had earlier German inflation confirmed at plus 0.1% year over year. That's of course the HACP, the European standard, or the way they want to call it in Europe, harmonized. Okay, lots of harmony. Anyway, we have later on inflation data from the United Kingdom, and that's at 8:30. Let's look at the figures we're expecting. So this is, of course, the FX Street calendar here on Forex Crunch. I'm already looking towards tomorrow because tomorrow we have bigger events. Anyway, but at 8:30 GMT, 9 in the UK, and 10:30 here in Europe. Most important figure to watch is the year-over-year consumer price index, CPI. You see there are lots of figures released at the same time. So that's important because that's the target of the Fed, the Bank of England. So we're expecting a small rise from 0.3 to 0.4. Still very low inflation due to, of course, oil prices, which have been falling. Second in line is the core consumer price index. Okay, the core CPI also year over year here is more important. Here we're expecting a rise from 1.2 to 1.3, still in mediocre territory, but any rise will be welcomed by the Bank of England. And of course, there is no chance of any kind of rate hike before the Brexit referendum, but it'll change the mood of the BOE. And then we also have the producer prices, RPI, which is the retail price index. I would say these are these will probably be ignored. Okay, so lots of figures there, month over month. I would say first of all, the headline CPI year over year, second core CPI, and then all the rest. Of course, as always with the mix of data, I should always look. I mean, if all the figures point to one direction, if all of them are to the downside, it's negative. If all go to the upside, it's positive. And sometimes we have these mixed results, these confusing releases. And also another thing to remember with UK releases, the market front runs these publications because they know something, or it's a rumor, or just some repositioning. And so we have a lot of action in the 15 to 30 minutes, quarter of an hour to half an hour leading to the event, and of course a reaction to the event. It may not be a long-term move, but remember, you've been warned. All right. Okay. So that's the big event for the morning, perhaps the big event for the day. What else do we have on the agenda? We have import prices in the United States of America at 12:30 GMT. I would say it's a second-tier figure, but still worth noting. Inflation in the United States has been a bit on the rise. We'll have the more significant figures later on this week. So import prices year over year are quite negative. We don't have expectations for that. We have expectations for month over month. After a drop of 0.3, now a drop of 1% is on the cards. Could have minor impact. Okay. At 6 GMT, we have the federal budget from the US. Also, I would say a third tier indicator. More importantly, I didn't put it on my slides. We have, two things also worth mentioning. The Fed's John Williams from the San Francisco Fed, which surprised with more hawkish comments of late, but markets now learned to ignore the hawks and listen only to Yellen. Anyway, he'll be speaking at 7 GMT, 7 p.m. GMT. And we have the weekly API, weekly crude oil stock, which is sort of a warm-up, which is a hint towards the crude oil inventories released on Wednesday. Wednesday is tomorrow. Also, for those trading the key, we have the food price index, but recently it's been overshadowed, in the past year or so, by the GDT, the global dairy trade. Okay, another big event comes only tomorrow morning, and that comes from the Middle Kingdom, from China. So it's the Chinese trade balance. Why is that important? That's important because it shows us the levels of trade between the world's number 2 economy and the rest of the world. And it's important because it's harder to fudge the numbers, harder to doctor them, game them, whatever verb you want to use. Anyway, because these figures are comparable with figures coming out from other countries. So if China says it exports 1 billion worth of goods to, I don't know, Korea, just fictitious numbers, we need to see the other side of that in Korea, right? And the same goes for all the countries in the world. Of course, there may be some discrepancies, but in general, it's the numbers are more realistic than GDP that we have on Friday, which is more or less some kind of an invented number or an accumulation of numbers from the provinces, which are not 100% reliable. Anyway, so the thing to watch here, if you are trading late at night, that's 2 GMT, 4 a.m. here in Europe. I usually sleep at this hour, but if you are trading it, wherever you are in the world, I would ignore the bottom line figure of the trade balance. It doesn't matter if it's a big surplus or a small surplus. What's more important is the change in exports and the change in imports. Okay, last time we had a big drop of 13.8% in imports. Very worrying for Australia, for example. This time, a drop of 10.2 is expected, 10.2% year over year. Exports dropped a lot in February, 25.4%. That was blamed on the Chinese New Year, the Lunar New Year, which shifts around. So, and that could be a plausible explanation. If we do get now a rise now, okay, so a rise of 2.5%, sort of a bounce back up year over year is expected. Many analysts, China experts look at the first 3 months of the year as a whole in terms of trade balance, not a specific month because of the Chinese New Year. Anyway, for those not looking that deep, it's better to look just expectations against reality. Okay, as always. So here we are expecting a bounce back. Yeah, we also have, of course, the bottom line numbers in US dollars and Chinese yuan. Other figures released are new loans, foreign direct investment, and money supply. But the big focus is on well, the changes in imports and exports. Imports into China are, of course, important for the Aussie, but not only that, and exports are also important. So anyway, so it's the more trade is better for the world, better market mood, and less trade is bad. All right, so that's quite a big event for the night. We'll of course dive into that tomorrow morning. I see a few comments here. Good morning, JM. Looking for one more run to 144 in cable, then 136. Yeah, we could have another run. Looking at your chart. Yeah, I see what you're talking about. Thanks for sharing the chart. Let's see if I can move it to the main window so everybody can see. Yeah, I hope you can all see this chart. No, I guess you can't. Just a second. Anyway, yeah, we could see another Hail Mary move from. Anyway, I hope you can now see the chart shared here by Luca. Seeing another move to the upside on pound dollar, taking these downtrend lines, support and then resistance on the top side, and then a big drop to even lower ground along the downtrend support line. So yeah, in terms of fundamentals, there is still more room to the downside. Okay, anyway, thanks for that. Yeah, makes sense. Nice technical lines here. All right, we're seeing, well, we're seeing euro dollar rising once again within the range this morning, a bit higher than earlier in the show. Yeah, in general, yeah, not movements aren't that big. Anyway, regarding the British pound, I certainly see room also in to the downside. Now, I read something interesting in about the Brexit. Even if Britain decides to leave the EU, there could be another deal, or renegotiate terms, and then we'll have a very nice ceremony celebrating a new deal, and in practice, Britain will stay in the EU. In the past, we had, the past 10 years ago, we had several countries rejecting the EU constitution, the Lisbon Treaty back in 2004. The French voted no, the Dutch voted no, and eventually not much has changed. So this might be also the case for Brexit. So the Financial Times sort of downplayed this decision. A comment here from Luca. Libya is going to come online in oil too after a new coalition government in function. It's going to make two big players, Iran and Libya, not part of any freeze deal. Yeah, we heard, actually we heard both countries saying that they're willing to freeze production once they reach previous levels. In Iran, it was they didn't produce as much because of the international sanctions, and now Iran is has been welcomed back to the international community. And Libya, there's terrible civil war still. Well, at least the country split into so many militias over there. It's quite a mess. Sovereignty is not real, and their production has been hurt quite a lot. And Libya produces what's called sweet oil, something that is easy to produce. It's cheap, and it's very close to the shores of Europe. And he also said they're willing to freeze. I mean, one of the governments there, the sort of Western-backed government, but they're willing to freeze once they reach previous levels. I think it's 1.6 million barrels per day, and now they're at the low hundreds. So it's still a long way to go. Again, remember, the sort of the fundamental reason for the fall in oil prices is the U.S. shale industry, new technology, and new investments. Some of it perhaps too risky, and we might see bankruptcies. That created sort of raised the level of production of oil in the world, made the U.S. less dependent on foreign oil, pushed down prices, and then the sort of the trigger for the big fall was the decision, mostly by Saudi Arabia back in November 2014, that they're not going to cut production. They want to see who breaks first. They wanted to minimize the impact of the U.S. shale industry. They had only partial success. We're seeing production fall in the U.S. only just a bit, and in the meantime, oil-producing countries are suffering. Let's see how things play out. Okay, more questions here. A tale of fleeting kisses and sharp projections. Okay, let's share another chart. Yeah. So let me try to move this chart once again. To the main screen. I'm not in my usual office. I'll be back there tomorrow. So here we go. Thanks again, Luca. So this is the chart of oil. Yeah, lots of kisses over there. As he said, they're kissing these trend lines. Yeah. So thanks for that. The trend line is the 200-day stay, right? Moving average. Yeah. Fleeting kisses and sharp projections. I also see a move to the downside. Thanks, Luca, again for an excellent chart. I'm glad you're sharing, and I'm glad everybody's sharing. Another comment here from Jake. Pound backing off may cut new highs before the drop. Yeah. I don't see. Let's look at that. I don't see really big moves. Closer look. Yeah, it's backing off the highs. The line I mentioned, 142.80. Further support at 141.75. My bias remains negative. Remember that we might be seeing some positioning towards the so in the last 30 minutes sort of, or sliding, the biggest moves come just the half hour before the actual release. Okay. Yeah, nice chart. Okay, for a few more minutes, let's talk about other events we have this week, because so far we haven't had too much. We do have tomorrow. It's a big day for a view of the US economy. And we have the retail sales release tomorrow at 12:30 together with the PPI. Why is it important? On mid-February, retail sales came out better than expected for January, and that sort of marked the bottom of the doom and gloom. Okay, the figures were later in March revised to the downside, and the read for February was also quite mixed. Recent figures in the US haven't been that good, and all the GDP estimates point to under 1% annualized growth in Q1. If we have a poor release tomorrow for March, still in Q1, we might be hearing more and more talk about a recession. Okay, if we have a positive figure, it's going to be good mood for markets for the world. Okay, so that's a key release because most of the US economy is about consumption. Okay, it's also a big day for Canada with the rate decision. No changes expected. We'll have perhaps new forecasts and oil inventories after the drawdown last week, which was quite surprising. And on Thursday, we have the jobs report. It's a day for. I made a mistake. Trade balance is already tomorrow. Anyway, the jobs report in Australia on Thursday together, and then we have the US inflation figures, the UK rate decision. All of those, of course, are also important. US inflation, to see if inflation continues lifting its head, defying what the Fed says about it. And the UK rate decision, I guess they will warn a bit more about Brexit. Yeah, and on Friday we have the Chinese GDP. Again, many doubt the figures, but still look at it quite seriously, together with industrial output, which is specifically more important for Australia, and consumer sentiment in the US. Not the most reliable figure, but a market mover nonetheless. Okay. So, yeah, that's a busy week. That begins a bit slowly. Just have a look at the charts. Yeah, pound is backing off. Yeah, I see, well, the dollar very, well, the mood changing very, very slightly. So the yen is not as weak and it's 10 pips higher or even a bit more. And other currencies, commodity currencies and the pound are a bit off the highs, with the euro dollar very stable in its frustrating range. Okay. See if we have any questions. No. Okay, so I guess it's time to move to the wrap up for today. This is the wrap up for the live market open for Tuesday, April 12th. All in all, we're seeing a positive mood in markets, risk on. That means commodity currencies are up, the pound is up, and the yen is down after many days of a surge. The British pound specifically, together with commodity currencies, is also relatively high. And it defies gravity. Everything is going against the pound in terms of news, but perhaps there's some kind of short squeeze, and that's why we're seeing some kind of improvement. Yesterday we had two non-event special expedited Fed meeting. Nothing was reported about that. And the meeting between US President Barack Obama and Fed Chair Janet Yellen, the result was that they talked about the economy. No leaks or no announcements of substance were made. Okay. What we did have in terms of indicators only came from Australia. Business confidence jumped to 6 points in that figure from NAB, and that's good news for Australia. It goes hand in hand with the better market mood. So let's look at a few charts in this wrap up. Euro dollar is in a very defined and frustrating range, 113.35 to 114.60. As we speak, moving a bit higher within this range. Pound dollar, as I said, the pound is defying gravity, 142.50 at the moment. Met resistance at 142.80, support at 141.75, and very strong support at 140.50. Dollar yen found support at 107.65 and moved a bit higher. Perhaps there's some kind of resistance there at 108.40. At least people in the Bank of Japan and the Ministry of Finance are have their chance to rest, not be worried too much about the strength of the yen. Dollar CAD in the Canadian dollar, we're seeing a lot of strength. We're approaching very critical support at 128.30, currently backing off these lows. 129.30 works as resistance, followed by 130. Stronger oil prices. And well, we also had a positive employment report in Canada on Friday. All these support the Canadian dollar, okay? And of course, the better market mood. Australian dollar, as aforementioned, enjoying the better than expected business confidence, but as we're seeing it now, it sort of unable to break above 76.40, but it did move above 76, and after finding support last week at the round 75 number, further resistance at 77.25. Okay, and the Kiwi dollar, currently under 68.80, higher resistance at 69.80, lower support at 68.20, followed by 67. Okay, so that's a roundup for charts. Not a lot of indicators so far this week. Not a lot of real news. Well, it's only the second day of the week. Things are getting warmer, well, already today, and then we'll have more moves later on. So today we have at 8:30 UK inflation data. Watch out for erratic moves before the release and, of course, afterwards. First and foremost, look at the headline CPI and then core CPI. At 12:30, we have US import prices. Could be a small market mover, a federal budget at 6. For me, the most important event is the Chinese trade balance. Has a big impact on the mood. Not the actual trade figure, but the number, the level of exports, the change of exports, and the change in imports, okay? More imports and more exports are more activity. Last time we had a big drop in exports, 25.4%, a huge catastrophe. You can blame it on the Chinese New Year if and only if we now see a recovery, a bounce in that figure. The world will be watching. These figures, as I mentioned earlier, are hard to fudge, hard to mess around with, okay? Because they are comparable with parallel figures in other countries, okay? That's why I think it should be quite an interesting release to see how economic activity in the world's number 2 economy is faring, okay? Yeah, and that's it, I guess. And let me see if we have more questions. Yeah, Jax has a surprising question regarding pairs to watch. So, well, it's easy for the next 45 minutes. Just look at the pound, or the next hour if you wish. The pound against the dollar, but also against the rest, because of the inflation figures in the UK, right? And at night, the Aussie dollar. Okay, if you're awake that late at night. Needless to say, apart from indicators, we also have the occasional unexpected comment from a central banker, the unexpected political event. Another question from Jake, Euro Yen correction. Yeah, we are seeing a correction. Let's look at the chart. I did mention it. Now we're sliding back down a bit in comparison to levels seen earlier in the show. Anyway, we did find here some support around 123. It's a bit messy. This recovery here reflects mostly the weakness of the yen. I mean, after many days of yen strength, low support 122.50. Okay, so 122.50, 123, and 124.20 are the lines to watch. If we have further yen weakness or some kind of big euro strength, 125 is the next level to watch. What we're seeing here is mostly the correction in the yen, the strengthening of the yen after, the weakness of the yen after many long days of falls. All right, so that's it for today. I wish everybody a safe and successful day in markets. As usual, we'll be here tomorrow talking about Chinese trade balance results, of course, well, and also other stuff. And of course, tomorrow also we'll do preview for the big event, maybe of the week, retail sales report from the United States of America. So, okay, so that's it for today. Thank you very much, everybody, for coming. Wish everybody all the best today, and see you tomorrow. So thank you, and bye-bye.